All right, let's get this episode started. Welcome back to the channel. Like always, my name's Jose Najarro, and I am a self-taught investor looking for investments to grow my long-term portfolio through fundamental analysis. And if you want to learn more about fundamental analysis, make sure to check out my other social platforms. The links are on the description below. I am very excited about today's episode. Today, I am going to take a look at 3 stocks to buy right now. In my opinion, these are stocks I just purchased this week. And like always, for each stock, I'm going to do the following. We're going to take a quick look at technicals. Then we're going to look at some of their fundamental numbers. And at the end, I'm going to look at my thoughts and say what I like and what I don't like about each stock. But before we start, let's make sure to smash that like button. It helps so much with the YouTube algorithm. And if you want to know when I buy and or sell stocks, on the description and the pinned comment, you should see a link to my Discord channel. And I post every time there. We have over 1,000 members. Also, while you're down there, don't forget to get your free stock on Webull. If you follow my link and deposit $100, we both get a free stock. All right, so like I mentioned, today we are going to take a look at 3 stocks. The first one is going to be Yext. This is ticker YEXT. Right now is sitting at $15.68. This past Friday, after reporting earnings, the stock is down about 19%. And to be honest, I did not think their earnings were that bad. Year to date right now, it has returned 7.1% to investors, so it's still profitable, positive to investors, and congratulations to everybody holding long. It is down 22% from all-time highs right now. We saw those all-time highs in like late August, early September. Right now, the market cap for Yext is about $1.88 billion. So this is a very small company compared to some of the other ones we look at. And this shows there's huge potential growth depending on the market. Let's take a look at some technicals before we move on to what they do on their recent news. So the first thing I want to take a look in their chart, is it overextended? Right now, we can look at here recent stock price, and this is pretty cool. These are some lines that I had before the stock even dropped, and it actually dropped right on the line. So first thing I'm seeing is it is not overextended. That's a great thing. The second thing I'm seeing is it is sitting around strong volume areas here. This between $15, between $13.69 and all the way up to like $17. You can see a huge amount of value. That means investors have been buying in at this price point. So that's good to know. We have strong volume. Strong volume usually means strong support within those stock prices. Next, let's take a quick look at what Yext does before we look into their financial numbers. So Yext is a pretty simple company. They create the world's best search experience to your websites for free, and in minutes. They also have obviously paid selections. But let's say you go to a website, and let's say you go to TacoBell.com. I think Taco Bell might be one of their customers. And you put, hey, what is your healthiest object in your menu? With Yext, if they have programmed Yext and they have written that answer, it would give you that answer, right? Instead of getting all these ads or getting the wrong answer. With Yext, it allows you to give the correct answers to those who are searching your product. And this helps out a lot, right? Because if a customer gets the correct answer when searching for something, they're more likely to know more about the product and more likely to pursue that product. For example, in the health service, let's say you might be someone who only speaks Spanish. Spanish came out first in my mind just because I speak Spanish, but let's say Spanish was the only language I knew how to speak. I would put looking for, let's say I had some form of health service provider, and I'll be looking for Spanish doctor that takes care of blah, blah, blah problems. And then it would give me a list of all the Spanish doctors within that network to kind of talk with them. So like now I get the direct answer. Now I'm more likely to move on with those doctors. So it helps. It's a great experience. And I do believe right now, as more people are moving on to the online platform, we need to have better answers instead of what just Google search gives you. And a lot of big companies use them. Farmers Insurance, Verizon's, IHA. You can go to Yext.com to see what are some of their other customers. The most recent quarter, which they reported this past Friday, revenue was $89 million, and it was up 16.6% compared to the same time last year. So that's still a strong growth company. Next, let's take a look at some financial numbers, future growth, cash flow from operations, and balance sheets, and then we're going to move with my thoughts. So right now, the Yext has some strong growth. It's expected to grow 19.6% on average annually for the next 3 to 5 years. This is anything growing over 15%. I consider a strong growth company. So I'm happy to see this 19.6%. Two things I'm not liking right now. It is not positive from cash flow from operations, and it's not positive in earnings right now. I can survive with the not positive from earnings, but the not positive from cash flow from operations is something that's going to be on the bad side in my thoughts. But first, we have to make sure that balance sheet is looking good. So in that balance sheet, we can see right now that the company has no debt. It is debt free, and it's actually been debt free for the past 5 years. So that's strong. That means it has a strong balance sheet. And since it is not positive from cash flow from operations, it has plenty of cash to continue its everyday activity. So that's pretty good news on the balance sheet. I also wanted to try something new to see in this most recent quarter, for quarter 3 of 2020, how many big boys bought Yext. So in quarter 3, 24 new positions were added into Yext, but 25 positions were actually closed out. 47 positions were increased and 44 positions were reduced. So what does this tell me? It tells me investors haven't changed their minds. It's almost a 1-to-1 ratio. For every one person that's adding, one person is reducing, and for one person that's opening a new position, one big bank or big whale is closing a position. So again, let me know if you guys find this one useful. We're gonna see some companies have a bigger buy side, so that's definitely, I think, in my opinion, some great information to see. So now let's take a look at my thoughts before we get on to the next stock. So what I like about Yext, first, debt free. We see it has no debt, it has plenty of cash at hand, it's seeing strong revenue growth. It is not overextended in its stock prices right now. It's actually sitting in a strong volume area, and it has a low market cap right now that the potential growth is, it can definitely be a 2-bagger, 3-bagger in the upcoming years. What I don't like, the two major things I don't like about Yext right now is the negative cash flow from operations right now and the negative earnings at the moment. But like I said, those are kind of overseen in my opinion because they have such a strong balance sheet. It allows me to overlook it. The third thing I want to say is maybe that revenue growth. I would expected it to be a little bit higher, but I do believe COVID situation, this is maybe businesses see this as an advertisement instead of actual answers. So this is a market that is probably not being powered by COVID-19, by the COVID market right now, just because a lot of businesses are probably seeing it more as an advertisement cost, even though it's really not. So before we check out the second stock, if you are a self-taught investor and want to continue to grow, make sure to join my Patreon. The link is down below, where I am giving amazing value to those that want to learn and become better investors. And you make sure to check out the platform so you can see everything I'm offering there. It's amazing if you want to continue to learn. So now the second stock we're going to take a look at is Huya. This is ticker HUYA. Year to date, it is actually down negative 5.1%. It is down 36% from its all-time highs, and it has a market cap of 4.47 billion. Let's take a look at some technicals before we move on and look at some of the recent news. The first thing I want to take a look at, is it overextended? We can see it's seen a strong pullback. It is not overextended at all. It is around its averages. It's actually overextended on the negative side, if I may say so. But one thing I'm not liking within this chart, we can see it is definitely in a downtrend. But what I am liking is, hey, we have a lot of volume within these stock price areas that tells me that investors are still buying in around these stock prices. Now let's take a look at what Huya does, and then let's take a look at their financial numbers. So for those that don't know, Huya is a live streaming platform. It's like Twitch, it's like YouTube gaming, it's like Facebook gaming. So people go and stream their games or just live chatting or any other stuff, and you stream it to an audience. That audience either gives you some form of reward for doing it, or there's advertisement. if you give a streamer some form of reward, Huya takes a portion of it. So the more streamers, the more people coming to watch, the more increasement in revenue this company is seeing. Also, more advertisement companies will come in here because there's eyes around here. So their most, we can see some of their big games are League of Legends, King of Glory. They have Peace Elite, Crossfire. They have Player Unknown. A lot of these games are owned by Tencent, and Tencent owns a huge portion of Huya, which is another great thing about it, in my opinion. And they're also in partnerships with Sea in Brazil. So Huya, even though it is a Chinese company and their live streaming platform is in China, they actually have a live streaming platform in Brazil that is doing amazing. And with the partnership in Sea, is continuing to grow users there as well. Revenue this most recent quarter was $414 million, up 30% year over year. And out of that, revenue is broken down into two segments. First is the live streaming segment. That makes up like 95% of the total revenue. The other 5% comes from advertisement. And live streaming revenue is actually up 23% compared to the same time last year. Advertisement is up 44% compared to the same time last year. Quarter three monthly active users, mobile monthly active users increased 16.3%, and monthly active users in general increased 13.3%. So we're seeing a growth here. And let me say this, right now in China, they are back in school. So it is a slowdown in gaming. It should be a slowdown in the gaming market because more people are in school, more people are back in work, but still seeing this huge growth compared to the same time last year is a pro thing for me. They're also increasing their total numbers of paying users, up 13.2% compared to the same time last year. Now let's take a look at some financial numbers before we move on to my thoughts. So here we're seeing it is another growth stock, seeing 17.6% average growth on annual average growth for the next 3 to 5 years. Anything over 15, I'm super happy. It is positive in cash flow from operations, and it's also positive in earnings. Next, if we take a look at their balance sheet, Huya right now is debt-free. They have a strong amount of cash. They are backed by Tencent. They are now merging with Doji and becoming the super live streaming platform in China. So I believe this is going to be a super powerhouse in the future. Now, if we take a look at how many people are buying, what are the big whales doing in quarter three? In quarter three, 39 big whales bought positions and only 26 closed. 60 increased positions and 40 reduced positions. So we're seeing a lot of more big whales are buying into this stock in quarter three compared to selling off. So that's another bullish thing, and I'm happy to see that, right? Because the price has gone down a bit. I'm guessing buyers are coming in now. I'm excited to see what quarter four will give for us. So now let me give my thoughts before we move on to the third stock I bought. And what I like right now, debt-free. This company has a very strong balance sheet. It has strong revenue growth. It is not overextended in stock price. It is sitting in a strong volume area. It has a low market cap, $4.8 billion, I think I mentioned. And its American competitor, Twitch, is, or not a competitor because they don't hit in the same regions, but it's the closest in form of company that does the same thing. Twitch alone is valued about $15 billion. So that's impressive. If Huya right now is sitting at $4.4 billion, the growth potential is dramatic there, especially with it pushing to Brazil. Next, positive cash flow from operations, positive earnings, strong additions by big whales in quarter three. It is in the market, the esports market, the live streaming market, the content creation market, one market I am very, very bullish on, and we're seeing huge growth in monthly active users. What I don't like, there's two things I don't like about Huya. The first thing is it is currently in a downtrend like we're seeing in the stock price. The second thing is, obviously it's a Chinese company. It is an international risk, mainly with the tensions going on. But for that reason, that doesn't deter me from buying stocks because it just limits my position sizes. So I only have X amount of position sizes international. This allows me to enter companies I feel will do great, but at the same time, it also protects me if they don't do great due to these international tension risk. So before we take a look at the third company, don't forget to check out my second channel, Jose Najarro Entrepreneur, for money goals and tips outside the stock market. Also, don't forget to check out the merch. I got a new hoodie right now. I'm pretty sure most of you guys have noticed. So self-taught investor hoodies, like I said, this is the perfect merge for me, and I'm pretty sure for you guys as well. So the third company we're going to take a look at is Nvidia. This is ticker NVDA, sitting at $542. You might say, Jose, this stock price is insane. If you are not in a broker right now that has fractional shares, I do not know what you're doing. Fractional shares are the greatest thing for investors that have less than, I want to say, $200,000 in their portfolio. So if you don't have $200,000 in your portfolio and you don't have fractional shares, I do not know what you're doing. It's a gift to us retail investors, especially here in the United States. With that plus cost-free trading, it has been probably the game changer for people like us. So right now, year to date, the stock is up 126%. Congratulations to all the long-term holders. It is down about 7% from its all-time highs that we saw in early November, I believe it was, and it has a market cap of $335 billion. Now let's take a look at some technicals before we move on to what they do and some recent news. Right now, first thing I'm seeing, it is not overextended. We can see we're sitting at those averages that I follow. The second thing, it is sitting at a strong volume area. We can see this portion between 480 and like 580. A lot of investors are buying. We can see the stock price has actually been pretty quiet for the past 2 months, not moving within this range. And what's happening within this range? A lot of investors are buying in, so that's building some form of support level in there. So that I'm happy to see that. Another thing though is after that, we don't see much range below. After this $488, we don't see much volume until like the 378. So I do want to say it would be pretty scary if it drops down below this, just because there's not much volume below that until we hit 378. So that's just something I want to note. Next, let's take a quick look at what Nvidia does before we move on to their financial numbers. So they pretty much create graphics cards that rule the world. They're used for gaming, they're used for data centers, they're used for professional visualization, they're used for machine learning, artificial learning, and high power computing. The revenue in this most recent quarter was $4.73 billion. It was up 57% compared to the same time last year. Most of it comes from two markets. The gaming, which makes up $2.27 billion, almost 50% of the revenue comes from gaming. And then the $1.9 billion came from data center. Both seeing huge growth, both markets I am super excited about. They are also doing strong acquisitions. They did a strong acquisition with Mellanox, which improved their artificial intelligence market and also improved their high power computing and data center market. And they're right now purchasing ARM, the ARM company, which is going to be a huge game changer for everything, all the other components that they can power up and combine with their GPUs. I do believe once that happens, it's going to be Nvidia will skyrocket. So I'm hoping that acquisition goes through. Obviously, there's always the chance that that acquisition might not be complete due to some maybe regulatory effects or legal battles that might happen throughout the process. But the acquisition with Mellanox has happened. They're being very aggressive with acquisitions right now, and I'm super pumped about that. Now, if we take a look at their financial numbers, then we're going to move on to what I think about the company. Right now, it's a nice growth for the size of the company. Remember, we saw $335 billion market cap. Right now, it's expected to grow 14.5% on average annually for the next 3 to 5 years. This is another growth stock, in my opinion. Like I mentioned, anything around 15%, I consider growth stock. Second thing I like is positive cash flow from operations. It's had positive cash flow from operations for such a long time, and it's also positive in earnings. And look at them, they're actually pretty good margins in my opinion. Now let's take a look at that balance sheet. It has another strong balance sheet. It has about $10 billion in cash and about $7 billion in debt. So it has more cash than debt. But remember, this company has positive earnings and positive cash flow from operations. So it's okay to have that form of debt ratios that I mind. And like I said, if you want to learn more about fundamental analysis, make sure to check out my Patreon, where I talk about stuff like this, of what I'm looking at and why I'm looking at this stuff. Next, let's take a look at big whales. What are they doing? So for quarter three, 249 new positions in Nvidia and only 105 closed. This is pretty amazing. We're seeing a lot more companies, a lot more big boys buying Nvidia right now. We did see 860 reduced positions, but we saw 701 increased positions. So we saw a lot more people reducing positions in Nvidia than increasing. But this to me only means one thing. I don't believe they're decreasing position because reducing positions for negative reasons. Just that those positions might have gotten so big over the past quarters that they had to reassess their portfolio and had to sell them after Nvidia gained so much in the past few quarters. So I don't see that as a negative out there. So now my thoughts before we end the episode. What I like: strong balance sheet, strong revenue growth. It is definitely not overextended. It is sitting at strong volume audios area. It has positive cash flow from operations, positive earnings. We've seen strong revenue growth in quarter three. They're hitting that gaming and that data center market. Again, it's in markets I am very, very bullish on. Again, both that data center and gaming market. And there are not many things that I don't like about Nvidia. The only things I want to say I don't like about Nvidia is they did say for the upcoming quarters, they're going to see actually a slowdown in the data center revenue. Again, data center is a big portion of their revenue, but it's not one that makes up the whole revenue. We still have gaming. We still have all the other platforms. So that is a bit scary, and I do believe maybe that's why we're seeing a bit of a quietness before we see what really happens with the stock price. So I hope you guys enjoyed the episode. Like always, make sure to hit the thumbs up. Don't forget to check out my other socials where I post great information for those that want to learn more. So take care, guys. Have a good night, and see you next time.